Hope everybody's doing well. This is Clayton Astor. I am the owner of Centurion Growth and Centurion Education Group. Centurion Growth is our business consulting and asset management firm where I manage assets for business, producing month over month cash flow to cover expenses, whether it be marketing, contractors, employees, expansion, whatever expenses the business can incur. And then Centurion Education Group is where I talk daily, live, every single day, Monday through Friday, about everything that I do in the market, where my positions lie, what I think is going on with the Fed, the economy, etc., and what I'm doing in the market to produce the monthly numbers that I talk about and the returns that I provide for myself and for the businesses I manage assets for, as well as for the folks who are learning how to utilize the strategies that I use on a daily basis. All right? And today will be the first part to a multi-part series about covered calls. And today we're going to be talking about how to execute a covered call. And I'll be using the Thinkorswim platform to show everybody how to execute covered calls. And I promise you it's not all that difficult. We're going to talk about covered calls and covered puts, but the first thing we're going to talk about is covered calls. So, on the screen I have one of a lot of people's favorite companies and favorite stocks, Apple, AAPL. Apple is currently trading for $148 a share. It is November 16th. All right, we are in after hours right now because I'm recording this in the evening. And we want to run some covered calls on Apple. Now, what do we have to have in order to run a covered call on Apple? We need to have 100 shares. And Apple costs $14.8K for me to buy 100 shares to run my covered calls. Right? So it's 148 times 100. All right? And if you guys would like to see the proper math, it's 148.79 times 100. Enter. So that would be the total cost at the current price point for me to buy 100 shares of Apple to run my covered calls. Let's say I buy my shares at, we'll just round it, 148, and I want to sell a 155 strike covered call. Now remember, covered calls are a bearish position, and they are primarily used to protect downside, right? Or just produce additional cash flow so that you have more money on the side to buy more shares of stock. That's what you so choose to do. If I want to sell a call, I do the absolute opposite of buying a call. So if I want to buy a call, that's long, that's bullish. But in this case, since we're doing covered calls, I've purchased my 100 shares at 148, and I want to sell the 155 strike. So instead of clicking the ask, which has a little buy tab underneath it, I'm going to click the bid. And the mid price of this is 67 cents times 100, okay? Because an options contract is worth 100 shares, all right? So it's 67 cents times 100. So I would get credited, when I sell this call, I would get credited $67, okay? $67, right? And if Apple goes at or above $155 a share, which is my chosen strike price for this covered call, I will get exercised and I will sell the shares that I bought at 148. I will sell them at 155. All right? And that is an $8 per share profit. So I would make $800, right? So the profit on that would be 800, right? And then my ROI would be 800 divided by 14.8K. All right? So it's a 5% return. Pretty good. It's pretty good, especially when Apple's been falling since January. It's a pretty good return. Can't complain. And let's say that trade took me 2 weeks. All right, so that's 5% on Apple, or 5.4% on Apple in 2 weeks. Gross. It's pre-tax. All right, and covered calls are short-term capital gains, so it's taxed at your tax bracket. Long-term capital gains is at 15%. All right, and long-term capital gains are achieved once you've held a position for 12 months or longer. So that 5.4 is gross. All right, not net. Gross, pre-tax. That's how I execute a covered call. Instead of clicking the ask to buy a long call, I'm clicking the bid to sell a short call. And that's how I execute a covered call. Now, I come over to the other side, and let's say I want to buy my shares of Apple at 140, which means I would have to keep $14,000 in cash in my account in order to be able to sell this covered put. And again, I'm not clicking the ask, I'm clicking the bid, which opens up a sell position of that contract, and the mid price is 45 cents or $45. Right? So if Apple is at or below, specifically below, my strike price, if it's at 139 by expiration November 25th, then I will buy Apple for $140 per share, and that $14,000 will come out of my account, and it will now be in the form of 100 shares of Apple stock. All right? So that's how I execute covered calls and covered puts. Thank you guys so much for joining. Thank you for listening in. We're a multi-platform company, so please follow our different platforms that we're on, Instagram, TikTok, etc. Please subscribe, comment, and like to the YouTube video. If you're watching this on YouTube, I'd appreciate that very much. And if you'd like to join our Discord to see what it is that I'm doing on a daily basis, join other traders, and be in our daily live call Monday through Friday, go to CenturionGD.com, and our Discord is right at the top. All you have to do is log in. Thank you so much for joining me, and I'll see you guys in part 2 of the Covered Call series. Take care.